Hi, welcome. It's Mary Ellen McGonigal with your weekly Edge show for Saturday, November 20th. Let's take a look at what we're going to be covering today. First up, we are going to take a look at the current markets and see where we close the week. Also, drill down beyond that, uncover any potential sector rotation, pockets of strength, and so forth, so that we can participate and take part in that outperformance going into next week and beyond. Also, take a look at some of the news last week that helped propel stocks one way or the other. And also viewer question of the week. And this week, the question has everything to do about two top retailers that reported, Home Depot and Lowe's. We are going to review which one looks more dynamic and why. So from here, let's take a look at some of the more impactful headline news. We did receive a report that October retail sales jumped 1.7%. And this big number, unfortunately, a lot of it was inflation-based, but it also did show that consumers are out in force prior to the holiday season. Also out last week, industrial production surged in October. This was good news because the increase took place despite supply chain issues. So it shows that the economy overall is expanding and on track to continue to grow. We also did receive on Thursday weekly jobless claims. They're continuing to drop. This is a chart of that peak in the jobless claims back here at the beginning of the pandemic. We can see the general trend has been downward, which is good news. We're now at a pandemic low, another signal that the economy is getting back on its feet and expanding. From here, let's take a look at the broader markets. And here we are with a daily price chart of the S&P 500. And we can see that the broader markets, as represented by the S&P, was mostly flat for the week. We were up about a little bit less than 0.5 percentage point. And in so doing, we can see that the RSI, that's a relative strength momentum indicator, remains up here in positive territory. We're above this net neutral 50. The index is continuing to find support above this green 10-day simple moving average. And then your faster moving stochastics, this is another momentum indicator, also up above 50, trending upward. So net, the broader markets, the uptrend remains very much in place. From here, we can then take a look at some of those underlying sectors. This is a daily 2-month price chart for the 11 sectors in the S&P 500 as well as the S&P. And then also I've added an RSI indicator and sorted it in descending order. I'm going to go ahead and update that. And up here on this upper left quartile is your stronger sectors, and then down below weaker areas that you do not, for the most part, want to be overweighted in. So up here we can see technology front and center. Great news for growth stocks. A lot of names in this area on the move, but next segment I will share with you one area in particular that is continuing to remain strong within technology. And then from here, next up, we can see consumer discretionary stocks back on the move after a pullback last week. I will tell you, last week's pullback, a lot of that was related to Tesla and then some travel related stocks as well. This week's upside momentum, the consumer discretionary sector was the top performer, up almost 4%. But again, Tesla was on the move, up almost 10% for the week. But also of note this week was the fact that a number of retailing stocks really sprung to life in response to strong third quarter earnings. And then from here, we do, of course, want to go ahead and drill down and take a look at some of these weaker areas, financials, bottom quartile as far as percent returns for the week. We can see this group fell below its 50-day simple moving average, And then the RSI now down here in negative territory, so not very constructive for financials. Another weak area that we can take a quick look at that had been trending sideways but really fell out of bed. This is Energy, XLE. We can see that the group had been consolidating until distribution this week. Friday's break below this 50-day simple moving average on very heavy volume with a negative RSI does not bode well for energy or energy-related stocks going into the near future. From here, let's go ahead and drill down even further. This is where I go ahead and populate these 2-month daily price charts with a number of ETFs. For my work, they are going to be oriented toward growth areas, but also you will see I have oil and banking stocks as well. We can just take a quick look here because financials really came under distribution, but bank stocks held in fairly well. For those of you subscribers to my MEM Edge report, we will drill down there further in this weekend's report. But let's go ahead and take a look at some other areas of interest. I talked about technology hitting another new high in price, all about semiconductor stocks. Again, they were up 2.6% for the week. A lot of that earnings driven, and then add on rallies in other semiconductor stocks as well. From here, we can take a look at another area up here in the forefront. I mentioned retailers that reported. This is XRT. Now we can see there was a little bit of some selling into the close of the week. Not all areas among retail are outperforming. But again, we're going to take a look at one area and two stocks in particular as we move on here. So one other area I did want to point out to you is software stocks. This is an area that I pay very close attention to. A lot of high growth names here in this group. It was actually down almost 1% for the week, despite a 2% rally in Microsoft, which is a heavyweight in this tech space. So the group overall does appear to be in a period of consolidation, which is fine, ideally setting up for another leg up. So from here, let's go ahead and take a look at Home Depot and Lowe's. Both companies did report earnings for the third quarter last week. Home Depot, you can see it gapped up out of this base. I'm just going to take a quick minute here to mark up this chart, share with you what I'm seeing. This is a nice 2.5 week flat base here in Home Depot. The company released their third quarter results, which were well above estimates, revenues and sales. And we can see the results had investors buying the stock, gapping up on very big volume. Your RSI already had been in a nice uptrend, but we can see that this move here caused a sharp rise in this MACD. That's a momentum indicator, black line up through the red, quite bullish. And the stock went on to even greater heights from there. So quite constructive. Let's go ahead from here and take a quick look at Lowe's. Home Depot is up about 10% for the week. LOW is the ticker symbol for Lowe's. Of course, these are both very large home improvement, construction related stocks in that retail space. And Lowe's also came out with very good numbers. 38% year-over-year growth, even higher than Home Depot. But take a look, the stock did not have as explosive of a gain. This stock was up about 5.6% on the week. We had similar upside momentum indicators here on the daily, black line up through the red with this positive MACD crossover. So from here, I am going to share with you dynamics in Home Depot versus Lowe's on the intraday chart that would clue you in, because I did add Home Depot to the MEM Edge report suggested holdings list after the release of their earnings, and they have gone on to, as you saw, greater heights. So this is an intraday. I'm going to change this to a 1 hour price chart. I use a 5 and 13 simple moving average. And here is that gap up on earnings. The company had gapped up the prior day, subsequent to Home Depot's release. And we can see that it really had a nice jump up to this 255 level. However, Lowe's pulled back and we can see that the RSI began to trend downward during this pullback period. And then most importantly, take a look at this moving average convergence divergence MACD on the 1 hour. We can see the black line crossing down through the red, indicating that this near-term upside momentum had shifted. Now, it does not mean that Lowe's upside potential is gone. It is still in positive territory, as is the RSI. It's just quite simply a very good indication of momentum. Let's go ahead and take a look at Home Depot on a similar 1 hour intraday chart. And from here, we can take a look. This is the stock's gap up in response to earnings. And the stock, of course, has subsequently traded higher. But let's take a look at that MACD. We can see that for the most part, for the remainder of the week, the MACD did remain up here in bullish territory. It was not until Friday that we did get that black line down through the red. However, the stock remains above its shorter term simple moving average, indicating potential further upside from here. But most importantly, you can use these intraday charts as a super near-term gauge after you see these big gaps up on earnings and other news, also pulling in those high volume characteristics to help guide you. That's it for this week. Everyone have a wonderful weekend, a great Thanksgiving holiday if you're here in the States. And if you like what you saw, go ahead and hit that like button and be sure and trial my MEM Edge report. I have a special offer and a link below. Take care. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.